Gold prices are on the front foot today, guys, ahead of tonight's FOMC meeting. So guys, why are gold prices making such a strong recovery this week? Because remember last week, gold prices sold off quite hard towards the latter part of the week. And the two main things that hit gold prices last week was number one, US government bonds sold off. And gold has a correlation with bond yields in the US because essentially when bonds sell off and their prices go down, the return you get on that bond, because it's cheaper, goes up. So as the return on especially US government bonds goes up, it makes it a more attractive place to put your money relative to gold because you're getting a higher rate of return. Think from an investor point of view, where would you rather put your money in a 2% interest account or a 10% interest account? Investors always chase more favorable returns. So you had these rising yields last week in US bonds, which was bad for gold. And then obviously there was that massive NFP report on Friday, so gold got slammed. But guys, we've recovered this week because we've been saying for, feels like years now, but underlying, like supporting gold in the long term, just underlining the price, are positive fundamentals. And focus this week has definitely returned to those positive long-term fundamentals. So for one thing, like I said in the title, we've got the Fed coming up today, guys, and there's growing expectations that the Fed is going to take action or further action. And one of those key things is going to be to actually cap that rise that we were seeing last week in US bond yields through a yield curve control program, basically where they control the prices of bonds and stop the price of bonds falling too much, which is good for the economy because it means the government can borrow cheaply, basically. And other than that, the Fed is just expected to be incredibly dovish still because, I mean, look at the state of the US economy. And what do we always say about gold? Gold loves central bank stimulus. So as long as the Fed is super uber dovish like it is at the moment, that's going to be good for gold. The other thing supporting gold, guys, USD weakness. So this links heavily towards all that stuff I was just talking about with the Fed. The Fed has been very, very dovish since the coronavirus outbreak. And then obviously at the start of the outbreak, you had this big safe haven bid that pushed the dollar higher. But ever since then, the dollar has been getting drastically weakened by one of the key factors is just how dovish the Fed has been. There are other things as well though, like look at the rest of the market. Risk assets have been so well supported recently, which has undermined the demand for havens, which you could argue is a bit of a gold negative, but obviously there's central bank support, which gold loves. Well, USD does not love central bank support from the Fed, okay? And it does not love really, really strong risk on market conditions. So, you know, you got to remember, guys, gold has a negative correlation with USD. So when USD is weakening, central banks are pumping, that is a good environment for gold. So we've seen a strong recovery. We're going to see what's going to happen tonight with the Fed. That is it from me for now, and I will see you in the next one.